In today's Money Watch, we're about halfway through 2025, which means it's a great time to take mid-year money moves. If your ambitious financial New Year's goals are collecting dust, along with that abandoned gym membership, CBS News business analyst Jill Schlesinger is here to help. Good morning, Jill.
Good morning.
So before we get to the mid-year finances, we got a bit of news. Today's job report was better than expected. Were we expecting a bad jobs report?
Not bad. We were expecting
Like
a
soft numbers?
deceleration in job creation, so slowing down. But we didn't get that. 147,000 jobs created in the month of June. We've been averaging about 150,000 jobs a month for the last 3 months. That about matches where we've been for the last 12 months. Unemployment rate went down by 1 tick. And to be clear, this just tells you that the job market remains solid. Good news for Jerome Powell, the Fed chair, because with the job market solid, they can basically look at the inflation report that's coming out soon and say, hey, if inflation is going to be ticking up because of those tariffs, we can keep rates higher. But overall, better than expected jobs report, a solid jobs report. There is no actual reason for the Fed to cut interest rates based on this.
That's a takeaway.
And that's the weird thing.
Because the president has been pushing Fed Chair Powell to do that.
Right.
Why?
So because it's better to have lower interest rates, it is better for the housing market, but there is no reason to cut rates if the market can continue to create jobs. That's really the issue. So, all right, so now when we look back and we get back to our segment, the one thing that I will tell you is that these higher interest rates have put a lot of pressure on people, and that is for real. That if you have debt, if you have thought like on January 1st, I want to pay down my debt, it has been hard to do so.
Well, we're talking about personal finance. Here we are mid-year. You're talking about ways to save money, but also find money. What did you discover?
Well, I mean, the funniest thing is that a lot of this is within our power. So I'd love for everybody to look at how you've spent money in the first 6 months of the year. Now, if you're not one of these people who's nutty and has an app and keeps track of every single dollar, pull up your credit card statements, pull up your bank statements, look at that Apple or Google Pay subscription number, look at what you're spending, see if you can scrape together a little bit of extra money. You can probably, I think most of us could understand that those subscriptions do pile up.
Yes.
The average American has about $1,000 a year worth of subscriptions. Can you free yourself up? Not the Paramount Plus one, just be clear. But if you can free up a little bit of money and then say, okay, let me take that money, I can use it to help pay down my debt. I can use it to increase my savings. This is the moment where you can take some control.
Well, there's always oftentimes that you sign up for things on a trial basis and then totally forget you signed up for them and they just keep charging you.
That's exactly right. And so these auto renews can really be pernicious. You may want to check out some of these subscription saving services. There's Rocket Money, there is Pocket Guard, Bobby, there's one other one, Subby for Android users. These can help you track your subscriptions. And one last thing before we finish up here. If you have found some money, a great way to make sure you capture it is to increase the amount of money you're putting into your retirement. Just 1 extra percentage point, 2 percentage points. It will help you so much get that discipline that you are so seeking. So just a little bit today, it pays off enormously in the future.
Love that advice. Jill Schlesinger, as always, my friend, thank you very much.
Sure.
Appreciate it. If you have a money-related question for Jill, send an email to askjill@cbsnews.com, and she could answer it in an upcoming segment.